Today I'm joined by Tash Etchman, who you might know as Tash Invests on Instagram. She shares her experience with earning, saving, and investing to try and make financial conversations less taboo. You're basically doing God's work. Thank you so much.
Amazing. Thank you so much for having me.
All the way from Perth. This is so cool. I feel like you're in the studio with me.
Yeah, this is very cool. I'm in a very fancy studio. This is great.
This episode is the basics of investing. And the reason why I wanted to get you in is because I actually don't know much about investing. I feel like we're sort of at this age now, and our audience in particular is at this age now where investing is important. We need to set ourselves up for our future. And to be honest, I don't know where to start. I don't know even what investing basics are. Like, I literally have no idea, which is kind of embarrassing, but also kind of great because it means that we're starting from the beginning here. And it also means that we can take our audience on a journey as well. Is that normal to not even know what like, I know what investing is, but I literally have no idea where to start.
Yeah, definitely. So if you think about investing, I guess when you're first starting out, you think of those guys in the business suits with their big giant monitors everywhere doing really complex, fancy things that we've got no idea about. And that's not what it is at all. So it's definitely very overwhelming. And there's so many different types of information out there and different types of investing. So yeah, it's completely normal to be overwhelmed at the start.
Overwhelm is the perfect word to describe when you're starting to learn about investing because there's just so much information. What do different types of investing look like? Like stock and crypto, like what else is there?
Yeah, so stocks is kind of like the ones you hear about a lot, or stock, shares, equity. It's all the same thing. So there's kind of four main types of asset classes that you can invest in. The first, like most least risky, is cash. Like we all have cash, you can put it in a savings account. The next one is like bonds or fixed interest, it's also called. And that's, have you heard of bonds before?
No. What is
The word's
that?
kind of thrown about a bit. It's, for example, when the government needs some more money because they've spent too much, they will issue a bond and people will buy it, and the government will pay them interest on that for borrowing their money.
What? Oh my God, I'm literally writing this down. Are you
It's
kidding?
great.
I didn't know
When
this.
companies want to raise, yeah, when companies want to raise funds, they can do it as well, and they'll get like a security rating. So you can have bonds that range from very safe, which is government bonds, to like other bonds that are less safe. I guess they're rated on a scale. So yeah, that's kind of like the next step up, I guess. And then next we have everyone's favorite, shares and equities or stocks, and they are more risky, and that's just owning a little slice of a company. And then
What?
I'll go to the next one, but I'll just take a breath there.
Yeah. I'm still shook at the bonds. I'm actually just shook. Like, I didn't even know that existed. What about crypto property? Is this
Yeah.
investing as
So
well?
as part of, so shares is like number three, and then four is investment property. So your main residence isn't an investment. That's a fun myth or a fun controversial point, I guess. Yeah. So your main house, we wouldn't consider an investment property or an investment. It's just where you live. And then you've got investment property that you can purchase, or you can buy real estate investment trusts as well. So you can buy property without actually buying the whole house itself, which is really fun. And then crypto is kind of like off to the side as like a speculative or alternate investment. So you've got like crypto, gold, silver, people buying like lithium and stuff at the moment, but that's kind of like
Yeah.
way off to the side. Yeah.
I'm so confused at this one thing you've said because, first of all, my mind is blown. I didn't realize there were so many forms of investing. I'm shook about the bonds thing. That's wild. Now I want to
We'll go
lend
back to
money to the
bonds.
government, but I also don't trust
Yes.
them, so I'm worried. But you said before that the house that you buy and live in is not an investment. I would think
No.
that it
So
was. What how does that happen?
it's kind of like, so with investments, you're kind of hoping to get a two-dimensional asset, which is a big fancy thing to say, but you want to get growth and income. So from shares, you can get the share price grows, and then you also get income in terms of dividends. With investment property, the price of the property grows, and then you get rental income, which is very exciting. But if it's your main house, it's not viewed as an investment for tax purposes, and you're not earning rent or anything on it. And a lot of people will put all of their money into their main residence, and then like really they're not diversifying their risk or anything like that, and they can't actually make an income off it.
Oh my gosh. I need to reassess my whole life now because that's what I really wanted to invest in was a great big house. But
Just one house.
yeah, interesting. Okay.
Hmm.
Well, you've really blown my mind there. Um, we've spoken a little bit, we dived a little bit into safe and risky investments. Can we talk about that? What are the safest and riskiest types of investments?
Yeah, so it kind of goes up. So you start at the bottom, which is cash. That's pretty safe in Australia. Like your bank account is guaranteed up to $250,000 by the government if it's a registered like ADI, authorized deposit institution, which is fine. And then the next one up is bonds. So if you're borrowing a bond from the government, it is like pretty risk free. Like the government's probably going to pay you back. It's unlikely they're going to default on that. And then above that, you've got shares. Shares and investment property. I think investment property is seen as a little bit safer, but you need a longer horizon for it. And shares can be like the risk can be managed, but it is a lot more volatile than something like bonds or cash.
Where does
Bit of a word vomit of information there.
that's
Crypto's like off
it's
the charts. It's not even part of this.
crypto's not even an investment. Crypto's just like monopoly money. Is that right?
Crypto's far, far away. Crypto like is interesting, but it's definitely not considered like on the. I don't know if you're learning about finance. I guess you've got your nice four safe things, and then you've got like your alternate assets, which are like crypto and things like that, or more speculative investments, we should call them.
Babe, I've already lost my money in crypto and I lost it within like 2 days.
Yes, especially
Like it's
recently
so
as well.
volatile. I thought I was doing so well. I was like, I'm investing in crypto. And then I literally lost it in like 3 days. I was like, fuck. And it was
Yeah,
a
crypto's heaps
substantial
of
amount of
fun.
money. I was like, God, that was so silly.
Oh no, I
I
think crypto
know.
is really great and very interesting, but I wouldn't like be relying on it as like your sole investment. Like it can be a thing that you put a few percent of your income into, and it's kind of a thing on the side that you hope for the best. But at the moment, it's really hard to kind of bet on it doing well, I guess, in the same way that bonds, shares, or property could go.
Now, I want to talk about the right age to invest. Is there a right age or is there a right amount of money to start investing? Like, is there an amount of money in the bank account where you go, okay, cool, this is enough now to start investing?
There's no like personal finance is very, very, very personal, and there's no one set rule that you can follow or one set age that you can start. There's micro investing apps these days where you can start with a few dollars. You can save up and start with a larger sum if you'd like. You can start when you're 18 and then like invest all the way up to when you're much, much, much older. So there's definitely no one set rule there.
How did you start investing? Like, how old were you and how did you know when you were ready?
I was 18. I had just been talking to my dad about it a lot. My parents were very open about money, and it was a very normal thing to be planning and talking about money and investing. So I just bought 4 shares of like an index fund ETF and then hoped for the best with that one. I put like $1,000 in, which was really fun. But yeah, it was just something I kind of built up to, and I kind of knew I had to do it because of my parents, I guess. It was always like, this is what we do. You invest and you grow your wealth.
That's amazing that you had such a positive, abundant mindset around money from your parents. Like, to have learned that from them is really cool.
Yeah, it was awesome. I didn't realize other people didn't have that until I was a lot older. My parents would always budget with us or openly talk about their mortgages and their pay rises and why they were doing things. And it makes such a difference because now I don't view money in the same emotional way. I kind of view it as like a tool that you can use to get things and have all those things behind there as well.
We often talk in the Better Foot studio about money being energy because it kind of is. And I like that you say
Mm.
it's a tool because money genuinely is a tool. Should we
Mhm.
be getting excited when we get money? Maybe not. Should we be feeling really stressed or anxious when we spend it? At the end of the day, it is constantly going to flow and move because it literally is something to be exchanged.
Yeah, yeah, definitely. Such a good way to view it. I feel
Yeah.
like there's so many people that have very emotional money stories, which is fine, but like we don't need to attach all of that emotion to money. We can just like make plans for it and spend it how we want to.
I've lost substantial money. Like I had a business when I was 19 that failed and for a young person I put like I don't know how much money, maybe 4 grand or I don't know. I put quite a bit of time and energy into it and it completely failed. And I kind of like didn't care because I was like, oh well, like I learned and
It'll
I
come
also
back.
it will come back and I learned a lot. I learned a lot about that failed business.
Yeah,
And it's obviously not a lot of money, but at 19 it kind of was like that's
it's huge. Yeah. I think it's like
yeah.
the growth versus like or the abundance versus scarcity mindset a lot as well. Like I came from a place where money was abundant. So I think it's going to always be coming back. Whereas if you come from more of a background where money is scarce and you have to fight for everything, then you're going to not want to let go of it that much.
Yeah.
My parents are kind of different in that way. Like dad's like, yeah, we can spend and invest and it's fine. And my mom's like, oh no, we have to save everything and we have to be really careful. So it's really interesting seeing that play out.
What is the difference between saving and investing? And should someone choose one over the other, or do they go hand in hand?
Yeah, they definitely go together. So I kind of view saving as Like you save for a short term goal, you can save for longer term goals as well. But saving is just you save the money as it is. You might get a fun interest rate, I guess, on your savings. At the moment, they are pretty low. Whereas investing is actually like growing your wealth and trying to beat inflation to make sure your money is worth more in the future. Because if we're just saving, often it will not beat inflation. Like at the moment, inflation's pretty high, I guess, a lot higher than our
So
bank account
high.
savings. Yeah, a lot more than our interest rate. So with investing, you're trying to grow that wealth and beat that and be ahead of it.
A few weeks ago, we had Maggie Palmer in the podcast studio from Pep
She's
Talker,
great. Yeah, yeah, she's awesome.
all the way from New York. And we spoke about inflation. And she said, if you're not asking for a pay rise every year, your bank account is declining because of
Yeah, yeah.
inflation.
Yeah, you should be getting at least CPI every year, which is what, like 5% or something recently? I can't remember the exact number, but like most of us
Wow.
didn't get 5% pay rises this year. And that's not even considering your like performance pay rise as well.
Well, as well because of COVID. I mean, I don't think anyone was wanting to spend money because everyone was so impacted.
Mm.
Interesting though. That really, when you spoke about inflation, it really triggered me to think about that because I've obviously I don't work for anyone, but I, have to do contract negotiations and all that kind of stuff. But I don't even think about inflation, which is pretty bad. Like, what kind of adult doesn't think about inflation?
Yeah, well, I haven't like my rates, I guess, because I do contracting stuff on the side as well, have been the same, even though I talk about all this stuff. And then I'm like, oh, I should actually like tack on 5% as well. So it does slide us by. Yeah.
Yeah, true. It's good. It's just a good, like, simple reminder that we need to be charging one for what we're worth, but two, what's going on in the world and the financial status of the world as well.
Yeah. And like if you're paying more for literally everything, fuel, food, all this stuff, you need to be paid more to keep up with it.
I know it's so simple, but we need to ask, don't we?
Yeah. Yeah.
So, if someone has no idea where to get started with investing, where do they go? Like, what's the best place to research, or how do they even start?
I think we all need to start by just like looking at our own money habits. I think a lot of people try and jump into it straight away and they're like, great, I'm going to invest because it's going to be good. And that's awesome. We need to look at building an emergency fund and then look at building those habits to actually invest as well, like finding the money in our income to do that or in our budget to do that. And then just Googling things like ASIC has a great website called Money Smart. It's got really simple terms. It's like by the government and the Australian regulator about all things investing. They've got budgets, they've got so many free downloads and stuff like that. So you can go there. You can even build your own toolkit on that website as well. So you kind of say what you want to do and it'll build you out a toolkit of things that you should look at to do those things. And then just Googling everything that you don't know as well. Like it's a big world and you're not going to be able to learn it in 30 seconds or in one afternoon. Like you have to kind of digest the information and then apply it to your own life as you go.
What does a toolkit look like? Like, how would that, like, if someone went through that process, what would be in there?
Stuff like how to do your budget. So they've got budgeting templates and stuff like that. If you want to look at your super or consolidating your super, it kind of just puts like the articles and stuff in there of things that you're wanting to look at for your goals, I guess.
Wow. Oh my God, I need to do
Mm.
this. This is a big
Mm.
kick up the bum. Would there be any apps or podcasts that you like? Would you ever look to apps or podcasts for information, or
Yeah,
is
I
it?
listened to so many
Yeah.
podcasts. She's on the Money season one was really good. I love that. They kind of stepped you through everything. My Millennial Money is one as well. Glenn runs that. He's awesome. Equity Mates did a Get Started Investing series, which was really good. I think with any of these, like just find one that you relate to because there's so many different money podcasts out there. And then listen to one in order, like a whole season, because there's a lot of information and it's really hard if you're listening to one episode from one podcast and another episode from another. So for example, Equity Mates, listen to Get Started Investing, like the whole season in order, kind of get like understand the basics and what's happening. And then you can kind of listen to all the other things around there.
Yeah, that's cool. I like that. Well, the jumping and starting is hard because they also might be speaking about things in the podcast that you don't understand yet. And then you might go,
Yeah, definitely.
oh, I don't like it. But if you started from the beginning and you did the beginner basics, you would actually
Mm.
find it super educational and interesting.
Yeah, because if you're jumping into like episode 500 of My Millennial Money, they're probably talking about trusts and investment properties and stuff like that, which isn't quite the same as going back to like, well, how do we budget and how do we actually save? And then how do we actually like basically open up a brokerage account?
Which is the first steps anyway of learning how to save and
Mm.
budget because you can't invest if you don't have any savings.
Yes, if you don't have the weekly income to do it, yeah.
100%. Have you used Finimize? What do you think of that app?
No, I haven't. Is that a
Yeah.
budgeting one?
It's like the stock market and like what's going on like financially. It's like a financial app.
I don't really like follow market news too much. Like I subscribe to the AFR, the Australian Financial Review, but I kind of invest for the long term and a bit more passively. Like I don't stock pick or anything like that. I just buy and hold ETFs kind of longer term. So I don't really want to pay attention to all the noise, I guess, in the financial market.
Yeah, fair. It's probably really weeding out the stuff that you don't need to know anyway. The
No,
fast
because
cash.
it's kind of, yeah, I kind of invest a bit more how I like super funds invest, for example. So it's just buying and holding and not sitting there and listening to what Apple's doing or Tesla's doing this day.
Oh my God. Like we all do that. We all do the fast cash or like what's going on. What did Elon Musk tweet about? You know what I mean? Like,
Yeah,
so it's
yeah. Or
nice
like
to have your
initially you like
advice.
you straight away jumped into crypto as well, which a lot of people are doing at the moment. And it's like crypto is really fun and exciting. And like talking about bonds is not, I love how you got excited, but it's not really that exciting in the
I
same
know.
way.
I think because
Mm.
they've made like with crypto, it's made to be like fun and almost like gambling and almost like a younger people's thing to do. Like all of a sudden now these people are into crypto. So it's
Yeah,
making
they've definitely like,
money not that it's money because it's not money, but it's all of a sudden people have become super interested in their portfolio or like whereas in the stock market it wasn't as discussed with probably more of millennials or even Gen Z.
they definitely gamified investing with like crypto and all the stuff that's happened recently with like GameStop as well. That was a stock in the US where heaps of people bought in and it was ridiculous. And, like the gamification of investing is quite interesting, like getting people involved, but also it's like shouldn't be a game. And the investors that do oh, this is a really fun stat. The investors that do the best or the investment portfolios were those who were either dead or inactive. There was like the survey in the US. So we shouldn't be sitting there like trading all the time because like statistics say that you will do the best if you just leave it alone and don't touch it.
Oh
But then you
my
have like the
gosh.
gamification of investing. Yeah, where it's fun to trade and it's fun and you get all these notifications and colors and you can stake things and it's yeah, it's interesting.
Oh my gosh, that's such good advice to just invest and then leave it. Do your research, invest and leave it.
Yeah, yeah. And don't sit there and watch the news and be influenced by the news. And like if you're just buying and holding basic index funds, for example, you don't need to be like, I don't know, getting excited about the newest crypto or the newest news or whatever's happening.
Also makes you feel like a bit of a boss, doesn't it? Because you're kind of like not listening to the white noise. If day trading or, you know, quickly and buying, selling stock is something that you don't want to do.
Yeah, yeah. And for most of us, like everyday people, we don't have the knowledge, or we don't have like the finance degrees, and we don't have the time to sit there and watch the news. Like most people should just buy and hold index funds because it's easier, it's not time intensive, and you don't have to learn so much about everything that's going on. Like it's just a side thing that you do.
I might need to speak to you about my investing because I really don't know much about the stock market. But I'd like to. And it's definitely something that I want to learn about. You seem to be very good at delayed gratification. And this is something that I really am keen for our audience to understand as well. How important is it to get comfortable with delayed gratification if we're starting off investing?
Like taking it back from investing, just like personal finance in general and good money habits, like it's so important. Like I really hate buy now, pay later. It's a very fun, controversial topic, but it's so bad for like making everything so easy and it's kind of tricking our brains into being like, you can spend less and buy things, buy whatever you want now. And it's very, very, very dangerous. Like I'm not perfect and I'm very impulsive, but I plan to be impulsive. I have like impulsive funds for that reason and I have
Oh,
buffer funds. Yeah, so if I want to buy something and it's in that price range, I have the money, but I've actually planned for it, I guess. And then just yeah, staying away from buy now, pay later, which I really don't like.
I think it's hard as well because when you do buy now, pay later, there's no consequences or there's no like, yes, you've worked hard for it, but you haven't saved and you don't get to like relish in finally being able to afford the dress that you wanted or the car that you wanted or
Yeah.
do you know what I mean? Not maybe I don't think you could put a car on it, but more like fast fashion is probably a good example. It's like everything's at your fingertips and you didn't have to like save for it because then you also do this like depressive phase where you got to pay it all back. So it really almost does
Yeah.
create a bit of a negative emotion around, or even just like a negative thought pattern around spending and saving.
I read a study recently on happiness and how money is linked to happiness. And they were saying the anticipation leading up to something gives us more joy than like the actual thing or the aftermath of it. Like they were talking about holidays and purchasing things. And they were saying the act of like saving up for it and planning it and talking about it gave you way more joy than actually like going on holiday, for example.
Oh, I love
Which is very,
that.
yeah, very interesting in terms of buy now, pay later, where we are getting these things, we haven't thought them through. And then we're like hoping that we can actually pay them off. And if you can't, if you haven't been able to save for it at that start, like at the start, then how do you know that you're going to be able to pay for it ongoing as well? Like you're kind of just really putting yourself into a bad situation, hoping that it'll all be okay.
What do first time investors need to be aware of before they start? Like, what are some big mistakes that you might see?
When I first started investing, I wanted to buy all the cool fancy stocks that everyone was talking about and I ended up losing a little bit of money. So I think it's like being aware of what you actually want to gain from investing, where your actual like knowledge lies as well, and then making a plan for it and not getting distracted by all the noise. Like if your plan is to buy and hold ETFs, you don't need to be looking at like crypto and all these other big things that are going on as well. And I think another one is just analysis paralysis. Like there's so much going on and there's so much information and there's so many choices. So not actually taking action on anything because there's too much to do. So stepping back and being like, day one, I'm going to open a brokerage account and that's my step and I'm going to start and I'm going to do it.
You said before, are you saying EFT?
Yeah, exchange traded funds. So they are a basket of shares. So instead of buying one individual company like Apple, for example, if Apple goes bankrupt, you'll lose all your money. But if you buy an ETF, you're buying something like the top 200 stocks in Australia. And you buy it through a fund that kind of manages the ETF, and they'll buy and sell the stocks depending on the index that's going on, like the ASX 200, which is the top 200 companies in Australia. So it's kind of like I don't want to say beginner investors, but it's kind of a safer way because you're diversifying your risk across all the companies instead of putting all your eggs in one basket.
That is so smart. And is that what you do now or how you started?
Yeah, I buy ETFs now. Because you can either buy like managed funds or ETFs, I guess, if you're wanting to buy the whole market rather than stock pick, I guess. So yeah, I just buy and hold ETFs, and then the fund managers kind of just manage it all.
How would someone start with a fund manager? Like, is this something that would be like finding a PT?
Yeah, so yes. Yes and no. You kind of the first point is you need to find a broker to actually buy shares on. So the broker is just the person who buys, not the person, I guess it's all on the internet now, but the site that will buy and sell them for you. And then you need to decide what to actually invest in. So you can research different ETF providers or fund managers that have ETFs and see which ones. So popular ones are things that are passive index funds. So they passively track the index, which is like the top 200 in Australia, for example. That's the index funds that you buy as an ETF on the broker, I guess. Lots of big words, lots of different words in there.
So, realistically, if you're buying ETFs and it's the top 200 in Australia, they are the top 200 businesses. Is that right? In Australia? Or the,
Yeah. Like
yeah.
the more accurate way is they're the largest 200 listed companies in Australia.
Yeah. And that's the safest option because they're the ones making the most money.
I don't want to say the safest. They are. It's you're diversifying your risk across all of those companies. So instead of like just putting all your money into one company, you are diversifying it across 200 companies. Or you can buy like an American one, for example. You diversify it across all these American companies, and it's a bit safer, not because they've got the most money, but because if one goes bankrupt, there's 199 other ones that'll prop up your fund.
And with the ETFs, is it more expensive to buy into them?
You have to pay a management fee to the fund manager for doing that buying and selling on your behalf, I guess. So for any investing, you've got to pay a brokerage fee. And then individual shares, you don't have to pay another fee from there. That's all good. But then, yeah, you have to pay a management fee, but it's built in within the ETF. And they can be very small. Like there's some that are 0.03% a year. So they're small fees. Yeah. And then that they kind of like buy and trade for you.
So if you say had like 10 grand or 15 grand or 2 grand or $200, whatever amount of money you had, could you put that into ETFs and then that gets diversified? Or is there
Yeah,
like, is
yeah.
there like a buy-in, like a minimum or a maximum when it comes to this?
It kind of depends what platform you're using. So with micro investing, you can start with $5, for example. Other brokers, you might have to put in 500 or $1,000. And then, yeah, you just have to buy whole amounts. So depending on the unit price. So some unit prices might be $10, while others might be like $200. So it just depends what you're buying. And then you have to buy whatever that unit price is. So you could buy, if it's $200, you could buy five of them for $1,000. And then the brokerage fee could be $10 on top of that. So you'll pay $1,010.
Yeah, wow, that's so interesting. I didn't even know what that was, and that's really fascinating. It's nice to know where to start, and it's nice to know that if you do diversify, you've also got can't really say it's not as risky, but you've got more opportunities to make money because there's so many different brands coming together.
Yeah, so diversification is an interesting one because you've got like diversification across like different types of companies. Like you could have banks or you could have like resource companies like mine sites. You have like diversification across countries. So we've got Australian, or you can buy US stocks, or you can buy any other country. And then you've got like asset class diversification as well, which is where you buy shares and bonds, and maybe you'll buy like a real estate trust or something as well.
I'm going to jump into our listener questions because this one I've just read and I think it's actually bloody amazing. Would you recommend paying off debt or investing?
It really depends. There's no one set answer here. It kind of depends on your risk tolerance as well. So if you pay off your debt, you are guaranteed to pay that off, and whatever that percentage interest rate is, you're guaranteed to pay that off. Investing, we are kind of hoping for returns, like they're not guaranteed in the same way. And then it really depends on like what the percentage is on that. So if the interest rate is a mortgage, for example, we'll use my example. Like I have a mortgage that's 2.6% a year. And then when I invest, I'm aiming to get between 7 to 10% return. So for me, it's better to invest my money rather than pay off my mortgage. And I also have a higher risk tolerance, so I'm fine with taking the chance and hoping and waiting to see if investments will pay off for me in that way. If you've got a credit card that's 24% a year and you're trying to invest to make 7%, it doesn't really make sense to be investing when you could just pay off your credit card. Like you're guaranteed to make a better return on paying that one off.
So it really comes down to the individual numbers and the percentages
Mm.
for the person.
Yeah, and like what risk you're willing to take. Like even for mortgages, some people pay their mortgages off because they find it really stressful having a mortgage, and mortgage stress is a big factor. So they'll pay that off instead and then invest later. But I
Yeah.
don't mind having debt and holding that. So yeah, it's fine for me.
Question number 2. Do you consider things like personal development courses or courses in general a form of investing?
I don't look at it as exactly investing, like I kind of separate them. So education is really important. And if you want to do courses in personal development, like it should definitely be part of your overall budget and spending plan. But I don't view them as investments in the same way, I guess. Like I've kind of got that very structured investments are property, shares, bonds, cash. Like we're going to leave crypto out of it. And then personal development and stuff is brilliant, but you just have to budget for it. But I wouldn't consider them the same thing.
Yeah, that's cool. I was really interested in your perspective on that because I see when I think of the word investing, I think, to be honest, I see it from a perspective as well as like going to the gym is an investment in myself. But it's just
Mm.
interesting. Obviously, like today's episode is purely about finance, but it is interesting when it comes to like courses that can make you money down the track. It's such a gray area because
Yeah,
you might not use that course. And was that an investment? It's hard to tell. So it was just like, I don't know. I just really enjoyed that question.
Yeah, especially with like businesses. Like a lot of people will choose to invest in a business rather investing in shares or whatever else. So like that return could be massive and exponential and it could be great, but I kind of like it kind of depends on your situation and how you want to view things.
100%. Question number 3 is, do you need to be a risk taker to be good at investing?
No, going back to my mum, I set her up with an investment account a few years ago and she is the most risk free, doesn't want to spend money on anything kind of person. So you don't need to be completely like you don't have to take all this risk. Like you can be a pretty risk-free person. You just have to manage those risks, I guess, and understand and have a plan around it.
Yeah, that's beautiful. I am very risk taking, which is why I probably haven't invested yet because
No, that's why you went straight to crypto. You're like, oh, what's 10% return on ETFs? I'm going straight to 100% crypto.
that's why I lost all my money in 3 days.
Yeah, yay.
Don't do what I did. So now we're going to jump into our recommendations, which is what we're listening to, reading, or watching that our audience might benefit from. Funnily enough, you've already said this podcast, She's on the Money
Ooh.
by Victoria Devine. And the other podcast I'm going to throw to is a podcast I did with Sarah, a good friend of yours and mine. The podcast is called Does Budgeting Make You Stingy? And it's literally just like a budgeting and savings beginner's guide, and it's so educational. So if anyone's listening to the podcast now and they haven't been to that episode, it's an incredible episode to begin with when it comes to financial well-being and financial health. The YouTube I'm recommending is by Tara Wagner Coaching, and this YouTube video was really good. It's 4 habits to remove your money blocks. So definitely more so around mindset with money. There's not much in here that's like super educational, but it's all about money blocks, limiting beliefs, how you view money and money being energy. And then the book I'm recommending is just an absolute basic, basic book that everyone knows, which is phenomenal, is The Barefoot Investor.
Ooh, interesting. Controversial.
Is it?
Yeah, I'm not the biggest fan of it. It's great. Like it got so many people into money and stuff, but it's definitely an interesting one.
I fully know nothing about money. So for me, it was probably like brilliant. But for someone
Yeah,
like
no, it
you,
was so good.
yeah.
I think it just like tried to put everything into one cookie cutter approach, which is what a lot of people want and need, but like it doesn't fit most people. But it's also really hard to articulate to everyone and to a huge audience one personal finance thing that would work, I guess. So he did really well, but if it
It's
doesn't
probably
work for
dated as
you,
well, definitely. Like, it's a
yeah.
very old book.
Yeah, and he does like the 50/30/20 budget, which I don't really like because like you can't really put fixed percentages on things for so many people. So yeah, it can be great. Also, could be better, but oh well.
Yeah. What are your recommendations? I'm super interested. I was about to say I need to take notes, but they're gonna be in the show notes.
Emma Edwards, she's from the Broke Generation and she has a podcast. She's awesome and goes into lots of like money mindset kind of stuff and money beliefs and like the habits behind money. So my content's more investing, but hers is kind of the stuff that leads up to investing. And she's awesome. She's got such a great sense of humor and she's awesome. So you should go listen to that one. I think for a book, there's no one investing book that I loved, I guess, that kind of like explained everything for me. So something a little bit different, but I'm recently been reading The Girl Who Fell from the Sky by Emma Carey. Have you heard of her?
I've heard of the book.
Yeah, it's so good. She kind of goes back to like she talks about like money a little bit, I guess, and it's not completely personal finance, but just like kind of setting those life goals and deciding what you want from life and like actually going for it as well, like taking advantage of everything that you have and making the most of it. She was awesome.
Oh, that's beautiful. Is there anything that you're watching?
Ooh.
It could be Game of
I
Thrones,
don't know if I
honestly.
ever.
It doesn't have to be. And most of the
I
time when we
recently
get to this
watched.
point, people go, "Oh my God, Kardashians."
No, oh, I've been watching way too much Below Deck, but I won't recommend that. I watched 5 Days at Memorial Hospital, which was insane. It was like a dramatized version of what happened during Hurricane Katrina in the US.
Oh my
It's
God.
insane. Yeah, the hospital lost power and water, and they kind of had to deal with it, and like the legal stuff that happened to the doctors afterwards. Mind blowing. It's on Apple TV. It's really good.
Oh my gosh, I love hearing people's recommendations like that they watch for fun because it's all so diverse. It's hilarious. Thank you so much. This was such an amazing episode. I'm really grateful to have you on. I've learned a lot from you, and I really feel kind of shook that I have such basic knowledge around this. Like, this has really given me a big kick up the bum, and hopefully for our audience, a kick up the bum to start researching, talking to their friends, listening to podcasts. You gave some amazing recommendations. I just want to thank you so much for your time today.
Thank you so much for having me. I've never seen someone get so excited about bonds, so that's cool moving forward. We've got a bond advocate here. It's great.
I'm just shocked that you can pay the government. Like, obviously, we pay the government all the time, but
The government
lend the
pays
government
you.
money and then they pay you
Yeah,
back.
yeah.
I don't know, man. I don't really trust the government. That would freak me out. I'd rather give
It's
money
great when
to
they
a
do all those.
friend, but
Yeah,
it's
do it. Add
nice.
10% interest. Yeah.
10% interest. Oh my God, that's amazing. Actually, I'm going to look into that. Everything you said to me today, I'm going to look into. And I'm going to check out that website because you spoke about an amazing website that's got some really good tools and resources that all of us will benefit from. You guys can find Tash on Instagram at Tash Invest. All of her content is amazing. I highly recommend giving her a follow. And are you on any other podcasts? Is there any other way that we can find you?
Yeah, you can come hang out on TikTok. Been making a lot of TikToks lately.
Go girl, what's your TikTok?
Just Hash Invest as well.
Tash Invest on Instagram and TikTok for all of your investing needs. And I'm sure lots of money chat and financial literacy as well, would you say?
Yeah, yeah, just general money stuff.
Amazing. Baby, thank you so much. All of Tash's details and the things we recommend will be in the show notes. Tash, thank you so much for coming into the studio.
Thank you so much for having me.